It is a bloody day in the markets as Trump's tariff attack, comments on Jerome Powell, and much more are leading to a huge drawdown. We'll be discussing that, everything else going on in TradFi and crypto on today's episode of Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, like today's episode, subscribe to the channel, drop a comment. Appreciate you for joining us. Remember, nothing we say is financial advice, so please do your own research. Kev, it is nasty out there right now. The major indices are all down by at least 3%. NASDAQ down almost 3.5%. The Mag 7 do not look too magnificent right now, getting absolutely pummeled. Seeing Apple down 3%, Nvidia down almost 6%, Tesla down over 7%, Meta and Microsoft each down at least 3%. The only green thing on my screen is Netflix, barely right now.
WrestleMania.
Meanwhile, we have WrestleMania. Meanwhile, we have all sorts of earnings kicking off this week. We have Trump talking out his ass about, what is going on with Jerome Powell. Markets are not feeling too good about that. So much happening, so much to dissect. How are you doing today, and where do you want to start?
Yeah, I'm doing good. This market was kind of what we expected. Last week we were talking about the window of volatility opening after OPEX. First trading day afterwards, you're getting these massive down days. It's pretty easy to follow this market if you're playing that game with options and, the SPY and the QQQ. But there's still a lot of conflicting things out there that really are just like, I feel dumbfounded when I'm looking at them. Obviously, we can talk about gold, we can talk about treasuries, Bitcoin, TradFi, all across the board. Everything's doing something a little bit different. And it's like, okay, how much longer can they hold this bag of shit together before something does break and then we get, some type of rebound in the market? Because as of right now, I still think we have a little bit more to go. But I'm not convinced that the bottom was put in, what was that, like 2 weeks ago? I think that was just something that people were hoping was the truth. Was not. I don't think any of these deals are going to be good coming soon. But to start, I guess, let's just take a look at the major indexes because these are just hemorrhaging at this point. Pull up S&P. I know I got a lot of shit on this chart, but I wasn't wrong. All right, let's go to the 4-hourly. And we can see what was going on here. You can see this big yellow line here, this ABC. We're going to turn that. Let's turn that. No, that's a terrible color. Pick a color, Jay.
While you're doing that, you pick a color. Go pink. I think we should probably talk about why a lot of this is happening today. And a big part of it is Trump's continued attack on Jerome Powell and how, these markets are already teetering on the edge. Markets don't like uncertainty. And right now, there was already a shit ton of uncertainty with all the tariffs and how that's going to impact the economy. Now you throw into the mix Trump doing his damnedest to create as much dissension amongst Jerome Powell as possible. I mean, you already have his supporters calling for Jerome Powell to be fired. They don't know why or why they want him to be fired. They just know that Trump is saying it, so they're gonna parrot that. And the markets are responding by freaking out here because they have no idea if Trump can pull this off, what that's going to mean, who's going to be making fiscal decisions from there. Is this just a takeover by the Trump administration to continue to push their agenda, how that's going to impact things? So it is just this giant clusterfuck, snowball of shit that is just building momentum. And now we're seeing it play out in the markets. And you add to that the fact that we still don't know what is going on with tariffs, what deals are being struck. I saw a thing today. Japan has tried to reach a deal with the U.S. They're just not even hearing back. Like no one's like, what even is going on with this administration right now? I think it's an absolute clown show. And I don't know how anyone has confidence in this administration to actually get anything done.
Yeah, I completely agree. Let's put it this way. It doesn't matter who is going to be in office. March, April, and September this year, we're going to be bad regardless. We're just looking at the debt cycles, right? But add the tariff, add the anti-Jerome Powell rhetoric. I mean, this market is becoming uninvestable. It really is. I don't think there's any deal that's going to come with Japan. I still believe, like I think we've called this since February OPEX to a T. Like we've pretty much said every move that's happened has happened. We've got the bounces when we expected. The only thing we haven't gotten is the yen carry trade unwind, right? That's the only thing that's not happening. Yen's also getting stronger as we talk. But with him saying all this stuff, it's just killing the indexes. The indexes are just pulling back. And that's why every time you see a bounce in the market, you're seeing JP Morgan, CEO JP Morgan, Jamie Dimon offloading more shares. You saw Facebook insiders selling a ton. You saw Google insiders selling off last week. There's been a lot of insider sales made, and it's telling you that a lot of these companies do not have faith in the market outlook for the time being. They're taking profit when they can before, more people dump. But looking at this right here, we said that this corrective move right here, this was an ABC. That was our wave 4. And we're going to come down for one final wave, which was wave 5. And within wave 5 waves, we got our wave 1, wave 2 bounce, the high at 54, 55 almost. Now we're in the middle of our wave 3. I think we're going to go lower than where we were 48.29 in the S&P. I think we're going sub 48. Anywhere between 45 and 48 would be pretty much, the move is complete, in my opinion, territory. But across other indexes too, like we're not done here in the NASDAQ. We're not done in the Dow. The Dow, I think, is going to go below 36.9 again. We're just not done yet. And I know we have rate cuts or a rate meeting in about 2 weeks or a week and a half or so. Whenever it's like May 1st, isn't it? Or something like that.
I'll check on that real quick.
Yeah, I know it's in May, but we're going to probably be seeing more negative price action moving into it. Whether we get the rate cuts or not, who knows? Powell is not budging. Trump's not budging. It's just hurting the markets. This uncertainty is crap for it, but it's also just the fact that we're seeing a lot of devaluation in other things like our own currency, right? Looking at the DXY, I was bullish on this thing a while back. I said, oh, yeah, it's going to shoot. We're going to move up. No, it cracked right through that level of support. We're going lower. It's the lowest it's been in 3 years, the DXY. And what is this causing? This is causing a lot of margin calls in other parts of the world. Most notably, we look at the yen. It's strong again. It's the strongest it's been since September of this year, and we continue to see that it's going to keep probably going down if the dollar keeps going down. Right, the dollar gets to 97 or so, the yen's probably going to be in the 130s. And I mean, think of all the people that were borrowing the yen, and now they have to pay that back. And then you look at the Mag 7 and see how much they're down. I mean, Apple, almost under 190. It's not a good recipe for anything going on in this world right now. That's why I'm so surprised nothing is broken, or we are just like, I don't know, a few days away from something coming out that kind of gives you that one last flush, and then maybe we get some type of QE. I don't also disagree with Trump too. I do think we need rate cuts, mainly because of how the debt system works. I'm not saying that we need it for inflation, and inflation is going to be a problem for the rest of our lives. I don't care what anyone says, but we're looking at what Europe has done, what some of these other countries have done. They've been cutting, right? They've been cutting, and that's kind of what we need to see if we want to see debt continue to be borrowed. And again, I don't think it's the right system, but it's necessary for there to keep this clown show alive. You need debt to be out there, to be available to people. I don't think many people want to be borrowing at current rates. That's just my opinion. I think that they've been burned in the past doing that. And if this thing goes completely reverse, then they're holding a bag of absolute toxic dog shit that's going to be down the road even worse than what it is today. So I think there is arguments to be made for both cases, both Trump and Powell. I just don't think we're going to get one that benefits anyone in the markets favorably.
Yeah, I mean, Trump demanding this while at the same time pushing the tariffs at the rates that they are, which is going to lead to more inflation, is just like, what are we doing here? It's asinine. A little over 2 weeks until the next meeting, so May 7th.
Okay.
Not probabilities of a rate cut are only at like 12%, so not looking great from that standpoint.
Damn. Yeah, I mean, we don't know what comes in the next few weeks or so. It's very possible we get something in June that juices the markets for 2-3 months into September, October. Again, we know a lot of debt is coming due then, 5 years. But Yeah, as of right now, we are still very much in the move to the downside, in my opinion. We're not getting anything that's saving the markets. You need some type of stealth QE or some type of like weak form of QE to get markets just rebound just a little bit. We're not going to get that, in my opinion. Let's look at what's going
Real
on.
quick, let's talk real quick about what we're looking at here this week in the States. We have not a lot on the economic data front. That's going to come more next week. We'll talk about that as far as employment reports, GDP. We'll get the first Q1 GDP reading. We'll get inflation for PCE this week, though. And, maybe none of this even matters with the tariff and Powell stuff, but we got a ton of earnings, earnings season really getting into full swing this week. Google is reporting. Tesla is reporting. Let's see what else. Philip Morris, Pepsi, Coke, Verizon, AT&T, all of these businesses are reporting Q1. I don't think that their Q1 earnings are going to be as important as what they say in regards to tariffs for future quarters. That right there is what the market is going to be looking for. And, that is going to be driving a lot more of the movement after these earnings report than the actual Q1 numbers, in my opinion.
Yeah, I agree with that as well. It's markets are going to do what they're going to do. I also lost you for a second there. My internet went out, but I got you back now. Where should we move next?
Let's we can head over to Japan if you want to go that route. The main things for me today, we're just kind of talking about like the bigger picture and then what we're looking for, and we can just kind of do whatever at this point.
Sweet. Let's we'll do Japan by way of the US. So we'll look at treasuries because Japan, they're going to defend that shit till kingdom come. They're never going to admit that they were wrong, and they're going to try and defend that Nikkei. But again, yen keeps getting stronger. What you are looking at here, though, is the 10-year in the US. You can see that we have 5 waves coming down here. 1, 2, 3, 4, 5. It's a perfect 5-wave structure. Now we're getting a strong ABC corrective pattern. A, B came down, found support on this massive, bull flag, and now you're going to push a lot higher. How high? Who knows? But I think that they are going to lose the long end of the curve, and it's going to continue to go up. I think we're looking north of 480. Just for the time being in this ABC corrective pattern. Maybe it comes down and then we, settle somewhere until we get pushing up a lot higher, I think till 6%. But what I'm looking at here is we are in the C wave and we're just starting it. We're probably going to be pushing up a lot higher. Where could this, can we go pretty fast? I mean, I think it's very possible that we get 1, 2, 3, 4, 5. I mean, it could be 5 trading days and we're up above 480. The key thing you want to look at tonight in Asia, or in this week in Asia, now that we're back to regular trading for the week, is some of these shorter duration treasury bills. This is what I mean. So you see these massive red candles there? That is a bunch of dumping of short-term debt that we're seeing in Asia. And you're seeing it happen at night right at the open, right? This went to 4.8. This went all the way to 4.875. And it's usually around the time that the yen continues to get stronger. If the yen continues to get stronger, you're going to continue to see a lot of U.S. debt being dumped by Japan. Everyone's saying it's China. It's 100% Japan. Margin calls are happening. They have to offload whatever assets they have in order to make sure that they are good on some of those bets that they have gone sour. And I'm looking at this and say even you're not seeing necessarily in the 1 month. You're seeing a lot more in the 3 month. See 6 month. 6 month, you had it one day where there was just a lot of selling. I think it's also the same day. Yeah, same day, April 1st, which would have been the night before the tariffs rolled out. Liberation Day. You're seeing a lot of that across the board. Longer term, you're not seeing that, right? You're seeing kind of just gradual, looks like a normal chart. But these shorter term ones are wild. And this is kind of an indication that something bad has gone wrong, or something bad has happened. Bad has gone wrong. Of course, something bad has gone wrong. I don't know, I can brain fart there, but this is what we're going to continue to watch because these are big thumps in the market that tell you that liquidity is drying up. I don't even think people notice this. Let's go to reverse repo. Last week, before I think, what is this? This is today. Yeah, last week, the reverse repo went all the way down to about 56 billion. So that would have been the lowest it's been in I don't know how many years, about 4 years. And it's kind of wild that it's dropped that much. Again, there's still a little bit of liquidity out there. We know that the bank term funding program is over. It's also why we're seeing the market pull back in general. But we're in a very unstable place for global markets. And that's why I'm so surprised that this market hasn't just crashed. There hasn't been more margin calls, more failures across the board, because if we continue at this rate, I mean, how we have to think about how much they have to unwind. That's just absolutely detrimental. It's going to be a fire sale at some point. So there has to be some type of flush, even if it's a short-term flush, like we saw back in March of 2023 with the bank failures. Something's got to give to allow these markets to breathe again, and you probably get a face-melting rally, and then after that, you're going to probably see one of the worst crashes. I'm just surprised that we're heading into May and nothing has necessarily happened when all the debt pretty much has been due in March and April. Maybe we get some lingering effects. I'm not seeing it yet, and that's the one thing I'm still holding out for.
Yeah, it could be some stealth QE in there as well. House GM, good to see you as well, sir. Julie, thanks for joining us today. Appreciate anyone watching this stream. All right, Kev, so we covered some of that debt, how it relates to what's going on in Asia. Anything else in TradFi or crypto that you think warrants some attention right now?
Yeah, I think we can focus more on crypto. I was just pulling up Apple here. You can see down 3.21%, Amazon down almost 4%. Like, these are all doing bad. Again, this coincides with, the yen carry trade. The things that they're borrowing to put into the market to go up are going down, and their currency is getting stronger. This is just leading to a massive unwind. That just, again, waiting for that to happen. Outside of that, you're seeing things like gold.
I will say real quick on the equities front, like, I don't know when it's going to bottom out, but we've been beating to death the point of like trying to save money and have cash on hand. And if you are a relatively young or new investor, it's not a bad idea. Not financial advice, but I think this is a good time to maybe throw a little bit, DCA a bit. Nothing crazy, but like, yes, it could get lower. It may but you're not going to nail the exact bottom, especially if you're brand new to something like this. So like, if you've been listening to what we've said even a little bit and you have some cash on hand and you're just starting off building your portfolio, like, this time is kind of a gift, right? Like, things will bounce back, maybe not as quick as some people would hope for, but I think that there are worse times to begin DCAing some of these equities. I mean, you're buying them at a discount compared to where they were just a couple months ago. So something to keep in mind there.
Absolutely. And again, we always know they have to sell from higher. So you will see these market bounces that are extremely violent. So sometimes that's not a bad way to scalp and get some really good gains, right? Especially when it's down, like you said, as much as it was to where it opened this year. Pulling up gold, this is doing something completely different. Just going all-time highs. I mean, Peter Schiff, you win this round, asshole. But you don't even care if I call him a-hole. I actually like Peter Schiff sometimes, so I don't know why I said that. But he's doing extremely well. Gold's up 3.07%. 3% in one day for gold, man. That just shows you how, when people don't know where to put their money, they always throw it into precious metals, primarily gold. And that's why you're seeing this massive squeeze on gold, because people are just absolutely unsure where they should invest their money, right? Asia looks like a shit show. We don't know how it'll impact markets given these tariffs in other markets. You're seeing the EU cut rates, like I said, 7 times. Usually you don't want to see put money into markets if they're cutting, and you're starting to see them tail off. It's a very interesting thing to be seeing gold this high. I think there is going to be a point where this tops out and we're going to see a massive crash. And I'm talking about like 5 to 7% drops per day. I don't know when that is. Maybe it's a first Fed rate cut from the US. Just something that's another warning sign out there that it does not make a lot of sense right now, given where we are in broader markets. That, like, this is a massive squeeze. I just can't fight this at all. I wouldn't touch gold right now with a 10-foot pole if I was trying to short it. I wouldn't short much, to be honest, right now. It's a very dangerous place in general. Bitcoin, let's look at that, because that's breaking out, right? It's up 2,000 today, literally 2,000 flat, 2.35%. A lot of people are getting very bullish on the timeline. Michael Saylor came out, said that he bought more. And the interesting thing about Michael Saylor buying more is not necessarily the fact that, he isn't selling it. The question is, when he runs out of money, what happens to Bitcoin's price, right? We have to look at, like, is there real demand out there for Bitcoin, or are people just speculating or just trying to ride up some of these moves? Is it a flight to safety? I don't necessarily know. I can't tell you that right now. I think more of the fact that Michael Saylor's the biggest buyer of Bitcoin out there right now. And if he continues to find money, it'll probably continue to go up. If he runs out of money at some point, you're probably going to see some type of pullback. I know there are some points where he is going to lose if the price goes below a certain level. I don't know what those levels are. I know some people do. But when we're seeing this here, I will say that Bitcoin's been performing extremely well compared to the rest of the market. But I don't like how you rallied this hard above the 50 and the 200 moving average ahead of a death cross, right? We've looked at TradFi in general. I can pull up the S&P real quick again. Right when we're about to get to death cross, you rallied hard. You rallied all the way to 5,400 after being down at somewhere around 48. So these hard rallies right around the time we're about to get death crosses, and then the market just absolutely reverses right after. It depends on market sentiment. Now, do I think we're going to stay above here? I don't know. I really don't know at this point. Everything is telling me that we should go down. Stochastic RSI is extremely overbought. The volumes have dropped significantly as the price has been pushing up. I'm counting ABC. Maybe it's 1, 2, 3. I could be wrong. And, we have waves 4 and 5 still to come. But there's a lot of things that are just very, I caution being in this trade for, thinking that this is going to go up a lot higher. It could. I also think that it could easily reverse given Trump saying one thing. We talked about all-time highs, or at least cycle highs for Bitcoin dominance. We got it today. We're at 64.37, right? This is dangerous for the entire alt market. Alt market is also seeing a bit of a pullback up a little bit, but it's still being contained relative to where we're seeing the rest of Bitcoin, right? I mean, this is pretty shitty price action. And if anything, it looks more like a continuation pattern across the board for most of these alts. So
it is just fucking chop fest out there, man. Like everything
disgusting.
Is trading in this awful, terrible, like all these charts are just hard to look at. And I think, when I was looking at Bitcoin earlier, and it's way overbought on the daily, moving to oversold on the weekly and monthly. So I think it could be one of those things where we do see a reversal here for a little bit, and then we find a local bottom, and maybe we can get a bounce from there on some of these, longer time frames. But yeah, like everything just, it's almost summer, right? Like we're seeing this, and we're getting ready for the, sell in May and go away crowd. So maybe you just start your DCAs for crypto as well. Like, set it, forget it, enjoy your summer, come back in maybe not September if you're expecting another bad month there, but maybe you come back in October, and hopefully your bags are well packed at that point.
Yeah. And again, every time there's an opportunity, and again, I don't necessarily think this is a great opportunity to DCA into Bitcoin. That's just not financial advice. It's just, this isn't where I wouldn't be buying Bitcoin. Obviously, I didn't buy it up here. I didn't buy it down here. I think there is some more room to the downside. I was thinking 60K. Given how strong it's been, I'm looking at 73.5, right? Just that's what we're looking at. I think there's like maybe 500 to 600 points down for the S&P. So if we get one little last flush, I think it's going to be down to that 73 level, and you might have a face melting rally into the end of summer. You might see alts rally with it. Maybe Bitcoin first, then alts, or alts, then Bitcoin. Who knows? But from there, you're probably going to start losing some of the major supports later on in the year. Again, it's all about debt. Michael Saylor getting more money to push this market up. But in the grand scheme of things, this is a very, very nasty continuation pattern, in my opinion. It's a megaphone pattern. It's at the bottom one of a move. Maybe you could argue it goes up from there. I don't think it is. I think we're going to come down, and then from there, we're going to probably see some really good price action movement. So 73.5, that's my range. Let's look at Fartcoin, then we'll look at GameStop and call it a day, because we gotta go over our bags.
Hey, Fartcoin continues to look strong.
Yeah, I mean, look at this.
Flight to safety. Look at that. It's beautiful.
We called the breakout at like 39 cents. Here it is at 89, right? It's a good move. Cup and handle it was. Didn't even stay much in the handle, right? It just broke right out from there. And obviously you're getting some chop here. I wouldn't be surprised if we come to test the 50 moving average, or, this trend line again. So 55 to 60 cents would be worst case scenario for Fartcoin, especially with volumes dropping off and the price, it was kind of moving in the opposite direction of the volumes. I think this is kind of in line with what we're seeing in the broader crypto market, maybe in the broader TradFi market as well, some type of retracement. But if you get some type of QE, or Powell cuts, or Trump says no more tariffs until
Maybe
October.
during his next speech, Powell rips a fart, and then we're just off to the races. Like anything could happen.
I would love to get a mic. We should put a. No, I'm not saying we should. I would never
Hot
be in the
mic
same.
on
Yeah,
Powell's on Dumper, and he just takes a big old fart. That'd be great.
I'll get the
That'd be
poly
great.
markets
I
going.
mean,
Does Powell shit?
that would retire my entire bloodline if Powell farted during the next FOMC meeting.
You know what? Stranger things have happened this year already.
Listen,
so
all I know is there was a lot of fart coin FUD last week. There were some big sales from whale wallets, and the price is looking strong. So I don't know. I'm feeling good about my fart coin bags. Let's go to GME, and then we can wrap it up. Hot air rises, baby. You're damn right, House.
Yeah, I agree. I fucking love Fartcoin, and I don't even have it. I will buy some in the next dip. But looking at GameStop right here, let me just get this off the screen. There's a lot of tinfoil. We talked about the Roaring Kitty 109 to 420 time to cover your shorts post back from December 5th. We expected a tweet yesterday, 420. Didn't get one. We did get a GameStop tweet about Xbox Series X or Series 1 or something like that being 420.69 if you traded it in on 420. So I thought that was pretty funny. The other thing about GameStop is that we're playing a very risky game here. There's a lot of people that are short this institutionally. Now, do I still believe in this? Yes, I think that we are going to get a squeeze, but you need kind of that catalyst for that to happen. And what I believe it's the yen carry trade where you really exhaust margin trades. There are no Fartcoin dips, only gas accumulation periods. Yep. Stitch that on a pillow and I'll put it in my living room. This is for GameStop. I said you're going to probably come down, test a 50 moving average, which is 25 or 12, 25.12 or so, and then you probably move up to the upside. You're having this really tough ceiling at 27 cents. You're getting some really good, post-market moves above that are like really quick, and then you see a sell-off. So I think there still is a period of, extreme stress around these levels that if it starts going higher than that, then they're going to have to start covering their positions. I think we're in, like I said, the window of volatility is open for OPEX now that we passed that. So now we're in a very interesting place. We're seeing extremely low volume too, and the price is still staying relatively high while they're shorting the shit out of the stock. So people just aren't selling. So I'm very excited to see what happens with this. I'm going to continue to keep an eye on this. I think nothing happens though necessarily until that yen carry trade unwinds. We're looking at 140.69 right now. Oh wow, isn't that funny for GameStop? But you start going into the 130s with Japanese yen carry trade. Maybe there's no deal with Japan and the trade with Trump. That could be the catalyst for hedge funds being screwed, short on cash, and then they're forced to cover their positions. I think that's probably the most likely outcome. So even though it's coming down a little bit, it's down 2.5% today. I'm not necessarily scared. I think that there is going to be a point
connecting the dots between tariffs, the yen carry trade, and a GameStop squeeze is truly remarkable and something you will not get anywhere else.
Not at all. And I will say this: Jamie Dimon is selling his shares. Facebook selling their shares. Google selling their shares. Ryan Cohen, Larry Chang, both doubling down, buying more shares at GameStop. That's the type of CEO and team that you want, that you believe in. I know AMC is not buying any shares, but that's why I believe in GameStop. And besides, let's put it this way. There's nothing fun going out there in that market right now. It is absolute shit. You got Fartcoin, you got GameStop. This is where I'm having way more fun. If I was in any other position, I'd just be miserable as shit. I think a lot of hedge funds right now are miserable as shit because they didn't get in on the GameStop trade, or they're on the wrong side of the Fartcoin and GameStop trade. So let's leave it at that.
Imagine being part of a hedge fund and you have no exposure to Fartcoin. Like that's
fucking idiots.
Terrible. We need a Fartcoin ETF. All right. On that note,
Patagonia today.
There you go. We're gonna wrap it up. I'll wear mine next time. We're gonna wrap it up for today. Appreciate those of you who joined us. If you haven't yet, like, subscribe, drop a comment, follow us on social. Have an awesome rest of your day. Busy week. We'll be back on Wednesday to talk through Tesla earnings, the latest PCE data, anything else that comes across. I'll be back on Friday as well. Like it's gonna be a fun week. So take care, everybody. Stay safe in the markets, and we'll see you next time.
Take care, everyone.